Hi, I'm Phil Thompson. Thanks for joining me for Phil's Finance Fix. Today we're going to be talking about income protection insurance. As you know, I did a video on income protection insurance last year. So this video is based around the types of policies you can have and what to look out for when you're comparing policies. So before we go any further, if you haven't seen that video, I encourage you to check it out in the comments section below. Alright, so the things to look out for in an income protection policy are the waiting periods. So waiting periods are exactly that. It determines the time between when you make a claim and when you get paid your first monthly benefit. So you can set a waiting period for as short as 14 days and as long as 2 years. And obviously the longer the waiting period, the less likely you are to make a claim and the lower premiums. So benefit period. This is a tricky one and where lots of people get caught out with the cheap insurance offerings. So benefit period is the amount of time the insurer will pay your monthly benefit for. So this can be as low as 1 year or can be as long as till you're age 70, depending on your occupation. So the numbers around a benefit period. So the change in the benefit period can obviously have a substantial impact in the total amount that you receive from the insurer. So if we had an example of two 40-year-olds, both earning $100,000 and they both were on an income protection claim and they never worked again. So one of them was on a benefit period of 2 years and the other one a benefit period till age 65. So the difference in the amount of benefits that they get paid is over $2.5 million. And for the sake of saving around $30 per month, it's quite substantial. So the next thing to think about is ownership. A policy can be owned personally and paid using your own funds, or it can be owned in your superannuation fund and paid from super. So now this matters for a few reasons. First is tax. If the policy was owned personally, then you'd receive a personal tax deduction for the premiums that you pay, while if it's owned within the superannuation fund, the super fund can claim that tax deduction. And secondly, it's how the benefit's paid. If the policy is owned personally, the insurer just pays the benefit directly to you, while if the policy is owned by the super fund, the insurer pays the benefit to the super fund, and then you need to apply to the super fund to get the funds paid out to you. So a fun fact, on the 1st of July 2014, stronger super rules were introduced whereby all income protection policies held within super must meet the temporary incapacity condition of release. Okay, so in layman's terms, this means that you can't have an income protection policy that has any ancillary benefits such as rehabilitation benefits, overseas assistance, housekeeping benefits, or an agreed value cover, and therefore potentially making the policies outside of super more attractive. The next thing to think about is agreed or indemnity value cover. So basically the difference between the two covers is agreed cover means that the insurer is agreeing to pay you the benefit amount regardless of your income prior to becoming disabled. While an indemnity cover, the insurer is guaranteeing that they will pay you up to the maximum cover that's on your policy unless you're earning less within the last year or two prior to your accident or injury. The last thing to look out for is the way you set your premiums. So is it either stepped or leveled? So leveled premiums is having the premium set at today's prices and won't increase with age unless you choose to increase your benefit amount. While step premium is having the premium start at a cheaper rate while every year, every premium renewal, it increases. So we just did a comparison for an accountant, age 25, earning 60K per year with a leading insurer, and the difference between the premiums of stepped and leveled was a difference of $46,475, which is almost double the total premiums of the policy. Thanks heaps for watching, guys, and if you enjoyed this video, please hit the subscribe button on the side and below, and comment below with any questions you might have about income protection. And don't forget to like us on Facebook as well. So thanks for watching, and I'll see you next time.